today I only entered one trade. Reason why I'm recording on my phone and my laptop webcam is because I went on the road today and just on my way home now. Might have a little noise in the background, but I went on the road basically. Still made the trade because I saw when the bearish candle was printed, and also had the MACD, and I'll show you what happened, how it looked on the charts. The thing about it was that I heard about a bank that went bankrupt or was doing some things that caused a lot of sudden pressure on the market. So you had SVB Bank come out and was talking about something. I'll probably show that at the end of the video. In fact, I could actually start put it up from now. SVB Bank. So there was like a run on SVB Bank, and it's actually the Silicon Valley Bank, and I'll pull that up at the end of the video and talk about it. But let's get into the video and I'll show you the one trade that I took today, and why I entered the trade, and how you could have probably wrote it down a little bit more just for that continuation. But it was a nice trade. It was probably a 1 to 4 reward. It ended up being because I really let the winner ride. Just looking at the MACD and seeing where it could have pushed on a bit more. So the only trade was to the sell side. So today I entered a trade on the QQQ. I'm actually recording this over because the previous one did not record the right way, but it actually makes it well drawn out for us, so I guess it helps. So today I made a trade and it was to the downside, so I had this bearish alert come up, the bearish engulfing candle, and then I was also looking at the MACD to see what it was doing, and you also have the EMA and the MACD that kind of showing you it crossing over. So you had a weakness in the MACD, you had a bearish signal, and I just went for tight stop loss there and just took it to the downside. As you can see, it never came back up. So I had a small risk, and then I was able to gain 435. And I actually have what the ratio was. So it's a 1 to 3.97 risk reward here. That's what happened today. I just made the best of that trade, just rolled it down, letting the winner ride a bit. So what else I wanted to show about it? While the trade was going down, I was able to move my stop loss to here. So at some point I couldn't lose money on the trade anymore. I was like in profit 75, in profit 200, until it went to 400 and I closed it. I could have made an extra around $300 today, but that didn't play out how I wanted it to. But because I actually sold it out, I'm thinking, okay, you see a weakness in the MACD, but then still continued with some strength, and that gave a further push down, right? So that's basically what happened today in the market. The market overall was getting pushed down by, I think, a possible bank run from SVB Bank, and I'll actually show you what happened today. Is this the one? SVB. Should be this one. Is this it? It should be Silicon Valley Bank. Let's see. I think this is what happened. Yes, SIVB. Let's make sure. SIVB. Yep. So you can see that within the day, Silicon Valley Bank moved from 263 to down to about 107. Right? That's more than 60%. 6% dump. So if you had shares in them, you lost a lot of money because something is happening. So, right? If you look at the article on Reuters, you see where Silicon Valley Bank scrambles to reassure clients after 60% stock wipe off. Right? Greg Becker, so this is the CEO of Silicon Valley Bank. So Silicon Valley Group scrambled on Thursday to reassure its venture capital clients that their money was safe after a capital raise led to its stock collapsing 60% and contributed to wiping out over $80 billion in value from bank shares. $80 billion. So if you're a shareholder, you got affected. SVB, which does business as Silicon Valley Bank, launched a 1.75 billion share sale on Wednesday to shore up its balance sheet. It said that in an investor prospectus, it needed the proceeds to plug a 1.8 billion hole caused by the sale of a 21 billion loss-making bond portfolio consisting mostly of US Treasuries. Wow. So they went in on Treasuries, but that was a bit early versus so when Treasury prices go down, the yield go up, so they'll pay you more, but the value of the Treasury actually goes down to match the amount that is discounted now. Far below the current 10-year Treasury yield of 3.9. It's probably at 5%. So if the Treasury yield is at 5%, they actually lost more money than this, because if the Treasury is giving you 5%, it's going to actually yield. It's going to actually have a lower share price. Essentially, that's what happens. Investors in SVB stock fretted over whether the capital raise would be sufficient given the deteriorating fortunes of many technology startups that bank serves. The company's stock collapsed to its lowest level since 2016, and after the market closed, shares slid to another 26% in extended trade. So I'm hearing where it's like the banks definitely need the inflow of cash, and if Treasury is offering 5%, why would people deposit their money into a bank that's giving you 1%? It doesn't really make any sense. So that's really what I saw that kind of probably pushed down the entire market today. So you had Silver Gate Bank, just not Silicon Valley Bank, and you also have some news with Silvergate Bank, and I'll probably put up that screenshot in the video somewhere. So we'll put that screenshot there. This is what somebody got an email why Silvergate Bank is not able to process any more transactions for the blockchain exchange. It's very, very bad, and it seems like we're having another bank run on our hands. So we're having a bank run, and then that's where after you have the bank run, right, that's where the market tends to probably pivot because you wash out a lot of the people that can't stand in the market, but I'm not sure how long that will last. Hopefully tomorrow the trade plays out as well as it did today. Just very clean, very smooth, and I was able to follow the trend and write it down, right? But I'll see you in tomorrow's video. Sorry about how today looks, and hope you appreciate it nonetheless. Alright, bye bye.